Another wonderful and beautiful and special guest, and her name is Miss Shirley Simple. But that's not really a real name, but I'm just going to call her that because of what she's going to talk about with us tonight. So Miss Shirley's going to tell you a little bit about herself, but before we get into Miss Shirley and what she does, I'm just going to let you all know that today is North Texas Giving Day, and we would like for you to give to our organization, Purple Light Touch Foundation. You can find it on the North Texas Day of Giving, and we would love for you to support our cause. We serve women and young girls recovering from any type of life-altering trauma, from domestic violence, abuse, bullying, sex trafficking, you name it, cancer. Purple Light Touch Foundation offers them a free service that they can come into and get a massage, empowerment, prayer, mentoring, anything that we can do to help them get back onto the road of recovery. So please go on to the North Texas Day of Giving website and find our name, Purple Light Touch Foundation. Thank you. And also, coming up soon, we will be having our, can you see it? Our walk, run and support against bullying, domestic violence and cancer. We would like you all to come out to the Chisholm Trail Park in Hearst, October the 8th, where we're going to have some fun. We're going to have a balloon release, we're going to have speakers, we're going to have a DJ, we're going to have a lot of things on that day, so please come out. We've even got a t-shirt, and I'm not going to show you the t-shirt today, but we've even got a special t-shirt already designed for this walk, and it will be going out probably later on this week. So please come out and support our walk, run and support our awareness for Domestic Violence Month. So Miss Shirley's here. I'll tell you one thing I forgot to tell you all about. Look at this. Miss Shirley, I'll be with you in a minute.
No, take your time.
Look at this. We have got our own blend of lotion. This one is for pain, this is for relaxation. I've just put some on my hands and my hands feel so nice and soft. So I'm telling you people, come and support Purple Light Touch Foundation, because we are doing our best to stay afloat so we can continue taking care of those that are in need in our community. Pain, relaxation, and trust me, you're going to love these lotions because these were designed by myself, Valerie Kelso. So anyway, let's get on with our show, and we are going to talk to Miss Shirley, and she's going to tell you a little bit about herself. So Miss Shirley, welcome to the Don't Believe the Hype show, and it's nice to have you here today.
Thank you.
And we are going to get into the show, and you're going to tell people a little bit about yourself.
Well, thank you for having me. I'm so excited to be here. My name is Shirley Caldwell Ross. I'm a senior loan mortgage consultant, and I help individuals get pre-qualified to purchase a home. I'm branding myself as Shirley Simple because I believe it is a really simple process, and I believe in starting simple and connecting the pieces until the dream is realized.
So that's exactly what you do. I know you're saying you let people know about their dreams until it's realized. But I got some questions I'm going to ask you. But you know I'll stay already. I'm going to put the spanner in the works, let people, because sometimes we think that things are so easy, but it isn't. So Miss Shirley, what do you specialize in for like first-time home buyers? What can they expect?
Well, when I got started in the industry, they always tell you need to find your niche. So as I searched, I realized that having been on the other side, having someone walk us through the home buying process was really important. So I help first-time home buyers create a path to home ownership because they may not have all the 4 requirements met when they call me. So I help walk them through that process to show them exactly what they need to do with credit, income, debt to income, and assets so they can qualify.
Okay. So what are some of the common questions that people would ask you about buying a house?
The most common question is when they call, they initially have an idea of what their credit score is, but then when I pull the credit score, it's totally different. And because what they're seeing on the consumer side is the Vantage score, which is a Credit Karma or Credit Wise or Credit Sesames.
Okay.
Those credit scores are typically for consumer credit and auto loans. But the mortgage lenders, like 90% of them, use the FICO score. And the FICO score has a harder scoring model, so the scores typically are lower than out of what I get than what they think they have.
So, say if like I had a score of 750, and so you're telling me, although I think I've got some good credit, you will pull my credit and find out that my score could only be what, 6?
Well, typically it's about anywhere from a 10 to 50 point difference. So anything over 620 is still, eligible. Actually, at my company, we can go down as low as 540. However, if you're trying to put yourself in a position where you can qualify for different types of loan programs, the higher the credit score, the better. So if you had a 750 that you saw on your side, it's typically not going to be that much lower, because anything over 7 is just really good scores. You can qualify for just about anything for that.
Well, mine's over 700.
Very good.
Well, trust me, I had to really build my credit score.
It takes time.
And I didn't mind, because I wasn't going to buy anything, you know what I'm saying? And now all these credit cards keep on wanting me to take their credit cards. But I'm kind of, do I want to do that? And the answer to the question is no, because I don't want to put myself in any debt.
Exactly.
Because, when I'm ready to get a house, you know where I'm coming, right? I know. So, is there any special, like, what can a first-time home buyer expect coming to you? And why are you different from somebody else?
I'm different because I treat all my clients like family. I talk to them like they're a part of my family, and I give them the truth about where they are and what they need to do in order to get to the scores that they need in order to purchase a home. So it's not just credit scores, but they may not have all the assets that they need. So there are tons of programs that are out there to help first-time home buyers, and even those that are not first-time home buyers. And the definition of a first-time home buyer would be anyone that hasn't had their name on a mortgage in the last 3 years.
Okay.
So there are tons of programs out there available. My goal is to pre-qualify them and then give them their options.
So I'm going to throw a spanner in the work. A few weeks ago, a lady said to me, "Oh, you can get a house." But the catch was, I had to live in a poor area to qualify for these houses. Why is it that when they do a program that you've got to live, I know, I'm throwing it out there, that you've got to live in a poor area to qualify to get one of these special deals?
Well, in my opinion, it's typically what I call the bait switch. There are programs out there that do have funds for individuals to get into homes. They have a lot of caveats that you have to meet in order to qualify. One of the popular ones right now, it's a wonderful program. It works for lots of people, but it is limited to certain zip codes. And the way it was announced, it is for Black and Hispanics. However, it's for any race. However, the houses that you can get has to be in a predominantly Black or Hispanic neighborhood.
Well, do you think that's fair?
I mean, fair or not, it is what it is. However, when I'm in class taking the courses for this, we learned about redlining and steering, and it reeks of that to me. However, I'm assuming it's legal because they're doing it. So whether it's fair or not, I don't know. But
see, I know what colour I am.
Yeah.
Nobody don't need to tell me, but I am not going to. I like this area, which is North Richland Hills.
Yes.
And I can't even get on one of those programs because North Richland Hills ain't going to do one of those programs. So why should I feel that? Because to get on one of these programs that the labeling for Blacks and Hispanics, why would I want to go just to get what's a percentage difference? It might not even be much, just to be clumped together.
Well, again, it's not for everybody. So there are individuals that probably already live in those neighborhoods that would need that type of assistance to maybe purchase the home that they're renting or buy their mother's house or something like that. So For individuals that don't want to live in those neighborhoods, there are other programs, but just about every program out there is going to have an income requirement.
Okay.
So,
and the other thing is, right, I'm not sure if it was when I came into this country, the early part, or when I was still back in England. There was a crash where, this is what they was telling us in England, I don't know how true it is, but I didn't want to throw it out there so you can answer the question before we came on the show.
okay.
I wanted to put
She wants to put me on the spot.
I am,
All
I'm
right.
going to put you on the spot,
Okay.
because you know, when you're dealing with someone, they need to know what their business,
Mhm.
and at any question somebody comes and give them, they should be able to give you an answer.
Absolutely.
So there was a time when there was something like this program where it was mainly for blacks and Hispanics, and they pulled the wool under their eyes, and a lot of black people end up losing their homes.
Mm.
I don't know if that was true, but that was what we saw on the TV. And this was some years ago. Is this program going to be like that kind of a program where they give you something and then they pull it from underneath you when they know you can't meet the pay the mortgage? Or
Well, once you get the home, they can't take the home from you. However, if you're not qualified for the home to begin with, but you get into the home because of all these programs, if you're not on a budget, and if you're not good with your finances, then you might not keep that home, because the homeowner's insurance is probably going to go up at some point, because it just does. And the property taxes are going to increase because the value is going to increase. So you can expect that your mortgage is going to increase. So I don't think the homes were taken from them. I think they probably lost the homes because they couldn't afford to pay the mortgage. So back prior to 2008, when the mortgage crisis happened,
oh, so you do know what I was talking
there
about.
there was what was called predatory lending. So a lot of individuals got into homes without really qualifying for the homes.
Okay, so I knew you
Yes.
see how long ago this was, and this was something that I remembered in England. So I was in England at the time, and I was thinking that ain't never going to happen to me. But you know, funny enough, right, the houses over here seem so overpriced, and yet in England it was like, oh wow, these houses are cheap. But then when I think about, I had a 3-bedroom house back in England, it had everything in it, and my mortgage was only $242.
Wow.
I know,
Wow.
I know,
Well,
I know.
you're not going to get that here.
I know I'm not. And it's not even so much a mortgage that people need to remember about. It's also the property tax.
Yes.
Because they can just be just as much as a mortgage.
Yes. Well, Texas doesn't have state tax, so the property tax are high, and the taxes are going to vary based upon where you live, county and school district. So when the assessed value comes out, the homeowner has the ability to protest that. And that information is on the back of their property tax statement, and a lot of them just don't read it. But if you read it and reach out to your agent to get comps, you can go down and make an appointment and have your taxes protested, and most of the time you'll win if you have done your homework.
Because I was thinking the other day when I wanted to buy a house, but people told me don't buy a house, the market's going to crash, just wait 2 years and then buy a house. And now the taxes at the what is it, not the taxes,
The values.
The values are going up. Actually the values, to me, they seem like they're coming down, but the lender rate is getting
The interest
higher.
rate.
The interest, that's
Yes.
it.
Yeah, the interest rate, yes. Now, the interest rate, nobody really tell you what's going to happen with the interest rate. However, historically, it's cyclical. It goes up and it goes down. So the predictions are at some point it's going to go down, but when that's going to happen, we don't know. We're in the high 6s right now, and we didn't think that was going to happen. We're at the beginning of the year, we're in the mid 3s. So it's doubled.
So would it be beneficial right now for somebody to buy a house or for someone to sell their house?
To purchase a home, I'm going to say yes, because we have this thing in the industry that we say marry the house, date the rate. So if you can get into a good house at a good price, now what is a good price? That's all relative to you. But with the cost of rents going up and you're paying as much for rent or as you are for a mortgage, then it makes sense if you can afford to get into a home to do that. because at least you have some control. You don't have any control of your landlord increasing your rate or telling you that they're gonna sell and you've got 30 days to move. The interest rate, because we know at some point it's gonna go down, my job is to stay in touch with you to make sure that you're doing everything that you're supposed to do to keep that credit score as high as you can, so when the opportunity is there to refinance you, then you're ready to hop on it when it's advantageous for you.
And another thing, when I was planning on buying a house, this was before I came to you, and the company said to me that basically I couldn't get a house because I hadn't run my business for 5 years, because I'm not non-profit, because I'm a self-employed. It was harder for me to get somewhere because I'm a self-employed person and my money will fluctuate. And they was telling me, well, you haven't been on your own business for 5 years, but I was only like 3-4 months from 5 years. Is that true?
Well, I don't know who that lender was that told you that, but I certainly wouldn't tell you that, because for me, all I need is 2 years of tax returns that show that you had a profit, and that profit has to be enough to average out with your debts for you to qualify. So as a 1099 employee, you pay your own taxes.
Yeah.
So we have a lot of individuals that make 6 figures, but they write off a lot of expenses because they don't want the tax liability. But what that does then is leave them with lower tax profit, a lower profit, therefore they don't have enough to qualify, because we got to take those 2 years of tax returns, add them up, divide it by 24, and that's your monthly income.
Okay.
So yes, you can, as long as you have tax returns that show you made a profit. But you know, I had one today, actually yesterday, it was like 82 for 1 year and 52 for the other year. Well, that's going to give you like $559 a month. That's what it came out to. I can't approve you for a home with that. So they showed a profit, but it was a low profit.
So as a self-employed person, what roughly is a bracket that you would need to show that so you can qualify for a house?
Well, that is going to...
I'm speaking for myself.
That is going to vary by individual, because it's your debt to income ratio. So we take the monthly debt that you owe that's on your credit report, plus anything that's not maybe child support or IRS debt or anything like that. We take that and we divide it by your monthly income.
Okay.
So the amount of debt you have will be relative to the amount of income you're going to need. So I have some clients that have no monthly debt. So the income that they're going to need would be considerably less than someone that had $2,000 a month in debt. So that's an individual case-by-case situation.
Okay.
And then I can't tell you what to leave on your tax return. That's up to your tax person. But certainly I have a calculator that you can use that can show you, you know, how much per month is going to be, and then we can back our way into how much you would need to show as income to be able to qualify for the house you want.
And supposing you do have the income, right? But your your credit score is low, would somebody still be able to qualify? That's not me, by the way.
Yes, so individuals at lower credit scores, we've got a couple of things. We can go down to 540. However, anything under 580 is a manual underwrite, which means it's just going to require a little bit more work, a few more hoops to jump through. However, I don't really care for them, so I want to take the time to get your score at least to a 580. If you need down payment assistance, we can get you to that 620 mark. But I have a simulator that will show you exactly what you need to do, what accounts you have to pay off, if you need to get a secured credit card, if you need to remove disputes. There's tons of things you can do. And it'll say how many points you should expect to get in a certain time frame. That's assuming that your current credit profile stays the same. Now, if you go out and apply for lots of debt and don't pay your debt on time, then that's out the window.
So, going back to what you were saying, the FICO score is different from credit-wise and some of the other. So
yes.
Why is there such a big difference?
Well, because the FICO score is a harder scoring matter, but you're getting a mortgage. So you're getting a 15, 20, 30-year mortgage
Mhm.
versus a 6-year car note or a revolving credit line.
Okay.
So it's for a higher price item, so it's going to have a.
Because that's what
harder
people
score.
need to know, what's the difference, because, you know, I didn't know,
Mhm.
you know what I mean, I do all of them, and I like to check to make sure that my credit is still in good standing,
Mhm.
which it should be, because I've just finished paying off my car note and I'm not going into the near future. My goal is to buy a house. And one of the things that he did say, which to me was relevant, was when I first moved into, I really wish I'd have done this when I first moved in, but at the time, hindsight, I wasn't working.
Mhm.
When I moved into my apartment, my rent was just under $900.
Mhm.
And then in 4 years it went up, it nearly doubled in price.
Mhm.
So I moved into a house because I thought, why am I paying all this money for a 1-bedroom when I could get a 3-bedroom house for a few $100s more,
Right.
you know, and I was going to buy a house, and I was just thinking, by the time I pay the mortgage and I pay the other one that is just as high as a mortgage,
Well, your property taxes and your insurance are included in your mortgage payment. Well, they should be.
it was like, it would have been more or less still like the same price as if I was renting.
Mhm.
So in a roundabout way, it would have been probably better if I'd have really went out and brought something.
Mhm.
But just like I was saying, the person told me that I couldn't get a house,
Mhm.
and now you're telling me something different. So that's why you need to make sure you find yourself a reputable,
Lender.
like me, Shirley, who is going to tell you the truth.
Yes.
Because I don't know if the person didn't want me to get a house. I don't know why they told me what they told me. Then when I went to Miss Shirley, she said no. But by that time, I was already getting ready to move into the house I'm in right now.
Yeah.
You know what I mean? So now I know that people should know now that your credit score is very, very important.
Very important.
And the appraisal you was talking a little bit about, so do you need to always get an appraisal if you're planning on buying a house?
Well, there's an inspection and there's an appraisal. The lender is going to require an appraisal unless your file comes back after the desktop underwriting and say that appraisal is waived. Sometimes that does happen. But a lender is going to want the house appraised because they're only going to lend on the value of that appraisal. So if the appraisal comes in lower than the sales price, the lender is only going to lend on that appraised value. Then the two agents have to hash out the difference between the sales price and the appraised value.
So between last year and the early part of this year, houses were going sky high.
Yes.
In Texas, and they were saying people from California was coming in and boosting up the prices. How true that is, I really and truly don't know.
It's true.
But and people were paying like 50,000 more for the house.
It's true.
What happened in a situation like that then?
Well, but they were paying more than the appraised value because they wanted the house. So having grown up in Southern California, I love my Southern California peeps, so we're not mad at you, but what happens is when you come from an area where they're selling their houses and they're bringing $400,000, $500,000, $600,000 cash, then they can afford to walk in and offer more because they come from an environment where the property values have increased, so they're expecting it to happen here. So that's why we had such a crazy market a couple years ago, because they were willing to do that. But when it comes to lending, if you want to pay more for their property, that's fine, but we're still only going to lend on what that appraised value is. So that additional funds, they just have to bring that to closing.
So say the house was worth $250, and I buy a house of $300. Can I sell that house back at $330 when I sell the house with somebody, or am I going to go back down to the original price of where it was at $250? Would I then have to eat that loss?
Well, it depends on the market. No different if you go buy a stock today and then that stock decreases in value. Well, your stock is decreased in value on paper. Unless you sell it, that value really doesn't matter until you get ready to sell it. So if you hold on to it and it goes back up in value, then you sell it, then you can make your profit. Same thing with the house. You just have to know when to sell. And that's always the $64,000 question. You just follow the market. Or have a really good agent that can share with you the market comps and know what is, when is a good time to sell or when not to sell.
And like for me, I had quite a few clients who were trying to buy a house and they kept getting kicked back outbid because somebody else was bidding higher, even
Mm-hmm.
though the house wasn't worth it.
Yes.
Even though they didn't have the appraisal.
Yes.
Can you still sell a house even though it hasn't got an appraisal or sold as is?
Yes. Now, a lot of the sold as is are investors that are going to buy the house and fix it up and flip it. But if you're getting a loan, a lender is only going to lend on that appraised value, period. So whatever, if that appraised value is higher than the sales price, then we're only going to lend on that sales price. So then let's say for example, you have a house for $300,000 and you have a contract for $300,000, but the appraisal comes in at $310,000. Well, you're going to walk in with $10,000 equity, but the lender's going to lend on the $300,000. But if that $300,000 sales price comes in at $290,000, the lender's only going to lend on that $290,000.
Okay. So what is your prediction going for the house market? Well, you need to know, get your ball out.
Yeah, right, crystal ball.
There's a little crystal ball over there. Get your ball out and tell the people what are your predictions going forward. Should I buy or should I not buy?
Oh man, I think we had a sales meeting the other day and my boss said if I knew the answer I wouldn't be here on the call with you. So if I knew the answer to that I wouldn't be sitting here. The reality is there are lots of people that are moving for whatever the reason, lots of people refinancing. There are people that have to sell, which means there are going to be houses on the market. So if you are in the market to purchase, then purchase, because this is as good a time as any. Again, that rate is going to drop, so we can certainly refinance you and get you a lower rate. But is that house going to still be, because had you bought 2 years ago, that $300,000 house was $250,000. So there are tons of people kicking themselves because they didn't get that house then.
Mm-hmm.
But then there are people that got that house and now want to sell it to take that equity to build or buy another home. So now you got houses that's going to be on the market. So I would say anytime you buy a house, it should be a good investment. Now, the operative word is should, because
Okay.
I don't know. However, we know that there are tons of houses that are corporate owned or investment owned. And so the crisis that we had in 2008, they're not expecting that to happen because there was so much done to make sure that individuals that are in homes now can actually afford the homes prior to the 2008 crash. So we don't expect it to be a crash, but can I say that there won't be? No, I can't say that.
Okay. COVID has played a lot into what's going on in the world right now. And I know there's a lot of people in a lot of hardships. What would you say to them if they are experiencing problems paying their mortgage? Is there any relief that they can get? Is there somewhere they can get some kind of relief in helping to pay their mortgage?
Yes, so lenders stepped up to the plate when COVID hit. They allowed as many borrowers, I think, that wanted to, that could afford to do a forbearance. I don't know that they're still doing that because we're 2 years, 3 years into it. But I think if you're having a hardship, the first thing you want to do is go to your lender to see what they're willing to do for you. And if not, certainly don't wait till you get to the point where you're about to foreclose. Make some decisions, sell the house, take the profit, and get yourself out of debt.
So I know, like I just asked you about COVID, and many people are probably are just sitting down in dire straits right now. And I don't know, I just feel that there's going to be a crash where COVID has played such a role because a lot of people are out of work, that the market might just start coming either down or it's going to go up, or there's going to be a lot of foreclosure houses going onto the market.
Well, unemployment rates are good. So, I mean, I don't know but everywhere I go, there's hiring. So either someone just doesn't want to work, or they can't find any work in their line, any work in their line of work, in their line of expertise. I don't know, but as far as housing is concerned, if you're not able to afford your house, the first place to start is your lender to see what they can do for you. And if they can't help you, then you want to consider selling so that you don't take the foreclosure on your hit on your credit report.
So once you foreclose on a house, or like you're saying, you take a hit on your credit report, can you still go back out and buy another house at a later date?
Yes, so there are requirements as far as how long you have to wait after that, and that's going to vary based upon the loan product that you take. So it's going to take probably 2 years.
So would you turn around and say to anybody, this is a good time to invest in real estate?
Again, real estate is an investment. So what I'm hearing from the powers that be, when stocks drop, that's when people go in and buy because they're getting the stock at a good rate. No different with a house. If you're in a market for a house and you're paying a mortgage payment, then you may as well pay your own mortgage payment. Now, what happens if it drops? Then you might take a loss, but that's a loss you would take on an investment anyway. So for me, I would say yes, buy, but.
So would you say if I wanted to change my career, which I'm not going to, would you say it would be, and if I said, okay, Miss Shirley, I wanted to go into investing in real estate, would you say to me, that's a good idea, not a good idea, or wait, or?
When you're talking investing as just as your own personal property, or investment to have rental properties?
Either one.
Investing for rental properties is always a good idea. Always a good idea. So again, if you're investing for your own individual house, you know, that's going to depend on how long you want to stay in the house, whether or not you're getting a good deal, because the market is changing, and a realtor can tell you whether or not that property is going to appraise based on the comps in the area. So, I mean, I get deals where they're getting great deals. I mean, I had contracts for $240,000. So yeah, those houses are still out there. So yeah, if you want a house and if your rent is going up, and you've got the credit score, you've got the income, you've got the debt to income, and you've got the assets, then you may as well buy a house, because you're paying somebody else's mortgage, so why not pay yours?
I know.
But investment into multifamily or real estate absolutely is always a good investment.
So is there a process long in trying to become a realtor? What's the process like? Is it a quick process, or do I have to wait for a year, or what test do I need to take if I wanted to become a realtor like you?
Well, I'm a lender, so I can't tell you how to do a realtor, but I don't believe as an investor you have to be a realtor. I know tons of investors that are not realtors, so I don't think you have to be.
Because I see people coming on Facebook now saying, oh, I've got my realtor's license, and so they didn't really need to go and get that license.
Well, it depends. So if you're going to represent a client as a realtor, then yes, you need a license. But if you're going to be an investor and buy a house for yourself and rehab it and sell it, or rehab it and rent it out, you don't have to be a licensed agent to do that.
Okay. So you're here. You can sell your mom's house if you want to sell it or Airbnbs.
Yeah, there's a lot. However, whenever you're doing a for sale by owner transaction, just know that you are required to know certain things, and the lender is not licensed. Even though we may know the answers, we're not licensed to give that information. So I may know it, but I can't tell it to you.
Okay.
So I'm not licensed.
So what's next for you?
Next for me, I am launching my brand, Shirley Simple. I'm really excited about that. I'm almost there. I came up with the name Shirley Simple because all my life I just consider myself a pretty simple person. I like to do things that don't require a whole lot of fuss. I just like simple, and I believe my approach to helping home buyers is simple. And my tagline is start simple, connect the pieces until the dream is realized. And whatever that dream is.
That is nice. So let me ask you one last question.
Okay.
What does don't believe the hype mean to you?
Oh my. that means do your own research. Don't believe what's out there. Ask questions. Don't take it for face value that someone said something. Like you, they told you that you had to have 5 years. I wish that we had come across that conversation prior, because we've been knowing each other a long time.
I know.
I wish I had heard that from you prior to that, because then we could have had a totally different outcome here. But don't believe the hype means, to me, do your own research. Educate yourself.
Yeah, that's, you need to educate yourself. I knew you was a mortgage lender. I knew you wasn't a realtor, and it was a realtor that put me in contact with someone else, and that's what they told me. You know what I mean? Because they were the same people that sort of helped me to get moving to the house I'm moving into right now. And so I just thought, okay.
Well, like anything else, if you're going to get a quote to fix up your house, you're going to get more than one quote. Go to more than one lender. It doesn't hurt to have your credit pulled by another lender. They changed that since the mortgage crisis as well, because they want the consumer to have the ability to get different quotes from different lenders so they can compare. Because not every lender is right for every client.
So, okay, this talking about getting your credit pulled, because I'm I can't stand no one pulling my credit. I ain't gonna lie to you. To me, that's like taking
off your clothes.
Taking off your clothes. You know what I'm saying? And I don't like, I will not let, as soon as they tell me about pulling my credit, you and me are done.
Yeah.
That's how I am.
But it's necessary.
So you're telling me, so if you pull my credit and somebody else pull my credit and someone else pull my credit, is that going to affect my credit score?
Yes and no, because we can always do a soft pull, but also if I do a hard pull for the mortgage side, my clients are losing 1 to 3 points. Typically, if your score is low, we're going to make that up anyway. If your score is high, 1 to 3 points isn't going to matter.
So how are you going to make up my score if my score was low?
Then I'm going to do a simulator and show you what you can do. It may just go up by itself. You may have to pay down a debt. You may have to get a credit card. And then sometimes, like you said, you paid off your car note. Sometimes paying off a debt can cause your score to drop.
It did. I was so mad.
Yes.
I was so mad.
Because with your credit score, credit history is 35% of your credit score. So once you close a line with good credit history, then your score is going to drop because that credit history is not there. Yes.
I was so mad when I seen it. I just wanted to find out who did it and punch him in the face. I'm sorry, people, but that's how I felt. Because it took like about 20 points off me. I'm thinking, I've just paid off my car note. I've done everything that I can to make sure my credit is good. I was nearly in the 800s. And then when I looked and I saw 727, where the hell did 30 points go? Yeah. I should have just told them to take my car note and just take $1 a month or something. And just
no, then that's when you talk to someone like me that can say, okay, let's go get a credit card or let's go get a small consumer loan to get that loan to get the credit history so that when you pay off that other loan, your scores won't drop as much.
I was so mad. I've got 2 credit cards and trust me, I don't even want to touch them because I was so, when Superman got the big S on his chest, and my chest was all pumped out and I was ready and everything, and I looked and I saw 7, what the hell happened to?
Yeah. Well, see, credit is a game. It's a matter of knowing the game. You got to play it strategically.
Thieves.
You got to play it strategically. It's like playing Battleship. You got to know where to move, or chess. You got to know how to move your pieces, and that's where a good lender or loan consultant, as I consider myself, will come into play to help you figure out what you need to do.
So you think I should go and get a credit card to bump up my score back to?
I think the usage of a credit card every single month is vital to keep your score up. It's vital. I know individuals don't like credit, but your credit is only as good as you make it because it's based upon your utilization. I'm not saying get a $10,000 credit card and spend $9,000 on it.
That would be me.
Well, then that's why we got to have a consultation, because I'm going to ask you, what are your spending habits? What are you doing? I had one girl the other day tell me, I shop. Well, when you want to stop shopping, call me, because I can't help you if I do all this work and you're still going to shop.
No, I try to limit my spending, and I try to buy the cheapest thing that looks good, that you would think it's quality. It is quality, to
Right.
me it's quality, you all will think it's quality, but I try to get, I'm not going to go out there and buy a dress for $200 when I can go and get one for $20. It does the same thing, it covers my body, that's all I need.
Absolutely.
Is my body covered up, you know what I'm saying?
But see, you automatically thought, well, because I was talking about spending, but when I talk credit, you can use your credit card to pay the things that you normally going to use your cash or your debit card for. And by getting a card that you can earn points, so let's say your monthly debt is $3,000, and you pay your car note, your mortgage, your cell bill, all your utilities, everything on that credit card, then you're accumulating points, and then you can use those points to buy things with. So my mentor, Kimberly Beckham, I love you dearly because she taught me this. They put everything on a credit card. We were headed back from Midland years ago. We stopped at McDonald's to get 2 iced teas. I reached down in my purse to get $2, and when I come back up, she's got her American Express black card in her hand. I'm like, why are you going to put 2 iced teas on a credit card? And so the drive home, it was 7 hours, she explained to me that they put everything on a credit card. They don't use cash, they don't use debit for everything. For every dollar, they get a point. And they use those points. She goes, you know that bracelet I got you for your birthday? American Express. You know those earrings I got you for your Christmas? American Express. They have a whole catalog, A to Z. Anything you want, you can get with points. So how do the rich get richer? They make their money work for them.
Okay. So I need to change bank then?
Well, not so much banks, just use that card for gas and groceries and utilities and cell bills and prescriptions and everything.
I'm still learning the pros and cons.
But
So I'm going to sit down with you and find it, you know what I mean? Because I've got a lady who's been talking to me about my credit card, and she's telling me which is the best one for me to get. But it's like I'm saying, I'm scared to put, after losing nearly 30 points on my credit, it was like somebody just turned around and gave me COVID 3 times.
wow, COVID 3 times over.
I was shocked.
But see, the thing is, if you use credit for your necessities, then that cash should still be in your bank account. So when that bill comes in, you paying it as soon as the bill comes in the mail.
Because you're going to pay it anyway.
Or you can take that receipt as soon as you get home, log into wherever you just shopped and pay the bill immediately.
So
It's there, it can be done, it's just discipline.
I'm very disciplined. They would make a cup of tea with a tea bag, and then they'll put all the tea bags together and make one big pot of tea. So you see what I'm saying?
Yes.
Because there's always a little bit of tea left in a tea bag.
Right.
And they will just put it in one big pot, and then, oh no, that's for a rainy day, and then they've still got the tea.
Yes.
So that's
yes.
me.
Mm-hmm.
I'm British.
No, you're frugal, I love it.
I've got to be, otherwise I can't keep all this going.
Exactly.
Me to get one, it's going to allow me to get one.
Mm-hmm.
So it's never going to be about me.
Right.
It's always going to be about making sure I can serve the women and the girls who come through this place. You know, I mean, those who are broken. That's my biggest concern. So that's why this North Texas Day of Giving is very important to me. So far, I haven't seen any money come through. I'm just letting you all know, and I've got another 4 hours before it closes. Please,
Please.
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 I'm not going to do this. I'm not going to do that. I'm just going to chalk it up to your hearts.
Yes.
Thank you for tuning into the Don't Believe the Hype show. Thank you, Miss Shirley, for coming on.
Thank you for having me.
I hope everybody got something out of Miss Shirley today, and a few questions I threw at her. At least she answered it and she didn't stutter like me. So I am going to sort out my credit, because I have to do everything I can to keep this place going.
Yes.
Thank you, Jamise, for being our camera lady behind the scenes. Is there any questions anybody said that you wanted to say before we come off air?
No, but I do show Love in Real Estate has joined us and they're following along, and she sent you some love.
Hey, Love.
So thank you everyone for tuning into our Don't Believe the Hype show. I will see you again in next month. It is next month.
Yes.
Yeah, because it's already the end of the month. I will see you next month.
That's
And
hard.
we've got a young lady and her son that, trust me, you do not want to miss, because this is an awesome story.
Powerful story.
It is, isn't
Mhm.
it?
I saw the video that they did. This is phenomenal.
And so
Phenomenal,
you've got to tune into our next show. And if anybody would like to come on, or if anyone would like to sponsor the show, we are taking sponsors. You can always have your name running across the show. You know what I mean? So tune into the Don't Believe the Hype show. We'll see you again in a few weeks' time. You have a wonderful and blessed evening, and God bless you all.
Bye-bye. Thank you.